The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good, Billy Ray. Feeling good, Lewis. We're having a little bit of technical problem out here in the desert. They've realized that we do have electricity and plumbing now, so it'll just be a little bit of a time, and then we'll be okay, I believe. But we'll see what happens this morning. Actually, it's my hotcom connection. Evidently, some folks are having some problems with it, and it'll be interesting to see what happens. So I'm just going to go over some of the things in general that I wanted to talk about today, and we'll look at them tomorrow. One of them I wanted to talk about was the Forex markets and how they operate, because I know there's millions of people out there trading Forex right now. Back in 1972, when you first were able to trade Forex, basically it was you had to have $1 million account, and in '72 that was a pretty big handle. Now lately, you can trade with I think $100 account with these micro accounts that they have right now, but back then, there were 13 banks. That's what the Forex organization was. The biggest one at that time, as I recall, was Citibank, and that was the largest for many years. I believe Deutsche Bank is the biggest now. I might be wrong about that because there's some others out there that I'm not sure. But these 13 banks, they report their trades into a central location, and they're reported. And what happens is when you see your charts, and I will show you some examples of this tomorrow. You'll notice that there's a wide spread sometimes, particularly in something like the Japanese yen or something like the Swiss and the New Zealand dollar with a weird cross rate, and that's the sum total of all the bids and all the offers that are out there. And so if you're trying to trade for just a few pips, you're going to get knocked off. You picked off almost all the time because that's the spread that they're using. Now, Forex says, there's no commission. Well, the commission is the ticks. So if each tick is worth $10, you're paying a $10 commission if it's a one-tick spread. If it's a 3-4 tick spread, like it could be in the yen versus the dollar, you're paying a $40 commission. However, you can bypass all of that if you trade at the Chicago Mercantile Exchange using their futures. And if you use the futures, you can actually see the bids and offers and the sizes that are there, and you can literally go in and place your order at a limit, and you're going to put your stop at a reasonable point, 12, 15, 20 pips. I don't use anything less than 30 pips, but you'll be able to be filled a lot easier. And not only that, but most brokerage firms only charge $4 round turn. So instead of spending $10 or $20 per trade, you're only spending $4 per trade. You figure out over 20 trades, you're going to save $1,000 a month just on that. So try to do some research on that and figure out that you can do this, and it makes it a whole lot easier to do it that way. The other thing that's a big advantage of that is most of the time the CME stuff is very, very safe because they always have someone on the other side of the trade through the clearinghouses. With the Forex banks, those banks are booking their own trades. In other words, when you put an order in to sell it, they're going to be buying it. And the reason why is they've got millions of customers or hundreds of thousands of customers that are going to take the other side of that. Now, all Forex banks have risk managers. They work 8-hour shifts, and their total job is for nothing other than to assess the risk of the positions that they have on. If they see that they have a 1 or 2 or 3% exposure to something into a report or something, what they will do, let's say they have too many long positions in the euro on their books, what they'll do is they'll take that off on the other side of the thing. They'll lay it off to Deutsche Bank or Saxo Bank or somebody like that, and that's how they protect themselves against risk. Now, what happens on something like what happened with the Swiss franc a couple of years ago when they came in and pulled that big shenanigan, which was a total ripoff? That was the biggest bank robbery ever perpetrated in the financial system, but of course nothing ever happened. There's nothing they can do about something like that, but they try to monitor their risk very, very closely. It's really something that they watch because they know that they have a big exposure. Now, most of the time, it's always equal. I mean, they don't have any problem. They can book each side of the trade without any trouble at all. There's never any problem. All they're interested in is the volume that they're doing there, and that's the whole facility. They're facilitating speculation. It's like a big insurance brokerage company facilitating, speculation, and that's why it's by far the greatest market in the world to trade, is because it has such high liquidity and great patterns and stuff that occur. So just wanted to go through that and talk to you a little bit about that early this morning. Now we made new highs last night in the NASDAQ. Of course, the S&P and the Dow Jones are certainly, way behind the curve on this, but we'll see if this is going to be the case. We'll just have to wait and see. Now, let's get into the gold market a little bit this morning. I'm not able to post in charts, but these are something that we talked about yesterday. If you've got an archive of this, you'll see the patterns unfolding here. Remember, we were talking about gold at this 1248 level as being relatively significant. That'll be a 1.618 expansion of that last move that we had. And if you realize that down at 1248, that is going to be down $35 from the high that we made up there at that 1275 level, and that's pretty much spot on to the harmonic number in gold, which is $34. So watch that one, very, very closely here this morning, because it's got some really big potential, for a pretty good move if it's going to hold this level. Silver. Yesterday, if you'll do your charts, and I really recommend, if you're into silver, watch it very, very closely, folks, because at 1680 last night, that was an exact 61% retracement of the low we made. Oh my gosh, about I think way back several months ago. So keep that one in mind, very, very closely also, because it's going to be interesting to see if it holds up at this level, because that was a spot-on 61% retracement. I don't have data, but I can't tell whether it's broken below that or not, because gold is weakening up here just a little bit, making new lows, and we will see if it's going to make this 1248 level that has been pulling it down, I believe, to that point. So whether it happens like that or not, we'll have to wait and see. So I think we're coming up to the first part of the break without any data or anything coming in. So let's just look and see what happens with the rest of the show when we come up to pay our commercial break here in just a minute. And we'll go from that level and keep going. I guess I can continue talking. One of the things that pairing, there we go.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've been able to post the chart of the Forex pair of the dollar-yen. It's a 4-minute chart, and all I wanted to do here was to show you these tails that I was talking about at the first part of the show. And that's why, if you're trying to trade for just a few pips, that's suicide, because one of those banks is going to have a pretty wide spread, and that could take you off. Now, that take you out of the market, so just remember that that's pretty much it. Now, we do have the Federal Reserve meeting for these next 2 days, but frankly, I think it's going to be trumped by the French election. Boy, if that wasn't a Freudian slip, I've never heard one before. But anyway, we'll watch this, because coming into May the 7th, I believe, this Sunday, is when we're going to have the final thing on the French election. And if that's a big surprise, we'll even have some more volatility in the market to see if that's going to be the case. Now, usually when we start our show out, we always start out with the German DAX, and we're going to push this up so you can see it. This covers the last week or so, just to give you an idea of what we're looking at. See the German market sold off last night. It stopped pretty close to the 78% retracement. But as you can see here on this 15-minute chart, you do have some really nice ABCD patterns and some really nice ratios that line up really nice with the German DAX, much like you do with the S&P, but frankly, the foreign exchange markets are, far better at looking at these things than we have with the stock indices. But the DAX happens to be a really big one. That's the one that they trade over across the pond. That's a big thing over there, so you want to watch that one, very, very closely. Okay, now the first question that someone brought out today is the gold market. If you'll remember yesterday, we were talking about the gold market getting down here to this 1148 level. We've already went through, let's put this up here, because we were talking about this to get down to this level, and we are here as we speak. We are very close to the 1248 level, which is the 1.618 expansion. As you notice, we went through the 1258 level without any trouble at all. That was the 127. The last I saw was around 1253 or something a little while ago. So whether that's going to hold below that, we'll be able to see if that's going to be the case. But silver is the really interesting one, folks, because that thing really, let's just put this up here to let you take a look at this. This is a very important chart for silver and gold because this is spot on right at the 61% retracement. We hit, that 1680. I don't know where silver is trading right now. If someone would be so kind, to let me know where silver is trading, but we hit that number just spot on, and it stayed there for several hours last night in the silver. So there was a really strong support at that 1680 level, and I don't know where the silver's trading, right now. So we'll see if the thing is going to hold up at that level or not. But it's very interesting here in silver to watch it because it's going to be a very very important thing, to keep a close eye on today. Okay, anyway, let's just take a quick look here. The gold did hit 1252, and it's holding its own here. We'll see what's going to happen with that today. And silver's held up. I just checked over my shoulder and checked on Bloomberg, and I can see that low in silver has held. So there could be a pretty substantial rally coming here if it can hold these levels. Whether that's going to be the case or not, that remains to be seen. But we'll watch it. But that silver number is really, really important. Anything below 1670 in that would certainly be a break in silver, and I would think that you'd be looking at something that would make it move to the downside, quite sharply. But right now it's holding up exactly where it should have. This morning we had a rally in crude oil from yesterday's high from the 28th. We went down to an exact 78% retracement yesterday, and we rallied up to an exact 61% retracement to the tick at 49.25 this morning, and now we're backing off again. And if we break below that 48.60, that's going to break out 48, folks. And if we break out 48, that's going to be a very, very negative sign. And that tells us that, we'll most probably be looking at something that would be, in the area of the low 40s or even into the 35 level. My very best friend, Byron Tucker, has a place up in Connecticut, and there's a whole bunch of hedge fund people up there, and one of them specializes in the oil complex, the whole part of it, the gasoline, the oil, and the heating oil. And they were chatting about it over the weekend. And the problem is that there's a lot of oil out there just hanging out there in tankers in storage because they want to sell it at a higher price and nobody's wanting to buy it. And if that oil comes to the market, that could be the thing that would push it down, to a much lower level. Remember, Saudi Arabia wants to peg it at, $50 a barrel. And, we're still trading $1.50 under that. So if they can't peg it at that, it might be 10 or 20% below that, and that's what move it down even lower. We are in a downtrend in this, but we'll still see what's going on. We got a caller from Washington, Camas, Washington. That must be up near the Oregon border. Is that correct?
Yep, it sure is. Morning,
How are you doing? How are you doing, Scallywag? Are you okay?
Trying to be.
Okay.
Walking around, staying away from open graves.
There you go. What can I do for you, Marshall?
Well, I'm real interested about your idea with the December corn. It looks like it's just completed an ABCD. And do you think it'll pull back before it takes off? Or?
Yes, I do, Marshall. One of the things that I've been doing, I spent last night a great deal of time looking at beans, wheat, and corn, and looking at how markets start. We started with a weather market here, and weather markets are, totally different than demand markets. So the sell-off that we get here, if we get one over the next few days, coming off of this ABCD pattern, will tell us, pretty much where we are. But we did get a really strong move in wheat. I mean, wheat went all the way up to the 61% retracement of the high. Remember, we just made new contract lows 5 days ago at the new moon, and it rallied 50-some cents. So, this is the kind of thing that you'd like to see. So what I'd suggest you do, Marshall, watch for a 38% pullback, because if it's really bullish, that ain't going to go any lower than that.
Okay, and what about the bean meal?
Meal still looks okay too. I think it's got, the meal has the worst fundamentals, and I happen to know this because one of the people that I work with is one of the largest hedgers in the whole country. He has 2% of all the farmland in the U.S. And so he really knows the fundamentals, and but even the fundamentals, as bad as it's been, they can't get oil below or meal below $300 a ton, and that's he just can't understand that. And I try to tell him, I said, somebody's buying that stuff, so I don't know who it is, but there's a lot of support at $300 a ton, in the meal. So I think we're making an ABCD in the oil too, as I recall.
Yeah. It just looks to me like the meal is ready to pop and break loose, go up.
Okay. Well, we'll be watching it, my friend. Thanks for calling in, and give Lynn my regards.
Say hi to Sarah. Bye.
You bet. Come down for a smoothie. See you later, buddy.
All right.
Bye-bye.
You'll do it.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to bring up this wheat chart just to show you what's going on in the wheat. And I wanted to give a tip of the hat to my good friend, Dr. Steve Shapiro, because many years ago he developed a buy on the new moon, sell on the full moon, or sell on the full moon, buy on the new moon. And boy, it has, within a day or two, this thing is like magic. I don't know, you can see here that red dot there on the 26th. The market bottomed, made a slightly lower low on the 25th, and it's had a 61% rally. We rallied we rallied over 43 cents. And look where it stopped, folks, this morning. This was the overnight trading involved here, of course. And as you can see here, we hit that 61% retracement last night exactly at the 461 level. It hit it spot on, and it's only 4 cents below it, 5 cents below it, but it's still doing what it's supposed to be. Now, what you want to do now is to watch to see what type of correction you're going to get here if you get one. But if we get above the 464 level today, that would tell us that we're most probably going to be a lot higher if it can do that. That's absolutely for sure. Now, yesterday in the markets, of course, the Nasdaq. We'll get back to the Nasdaq here a little bit, but the Nasdaq has been, very, very strong, pulling things up with it. There's a huge divergence, much like we've had in the other markets at other times, like we had in March of 2000. If you remember, the Dow topped in January of that year, but it wasn't until March 24th that we topped in the market in the Nasdaq. I remember that weekend so much because we were in San Francisco at a money show, and the people were just, walking around with their equity runs, showing everybody how much money they had made. That was the end of the dot-com bubble. It was really hilarious, and it was so bad that I had to get up on my chair and stand on the desk because the people were talking, showing their positions, their P&S statements, and I just tried to tell them how dangerous it was right here because we had so many patterns completing. But only one person called me up and thanked me, and I asked her if she got out of the position. She said, "Oh no," she said, "I just thought it was interesting that it was down the first week like you said it would be." Well, it dropped 87% over the next 2 years. So anyway, let's just watch this and see what happens because there's a tremendous amount of emotionalism in here, and that's the main things. Folks, I still think the best thing to buy here is the volatility index. I know it made the VXX made a lower low yesterday, but I really think that's the value in here just because of the fact that the volatility, that no one's taking protection. And with the market way up in the air like this is where you want to pay real close attention to what is happening. And I think that's the thing that you have to worry about, very, very closely in here. And, some of these stocks, let's just give you an example. People don't realize this. They talk about Google and Amazon and Facebook, but look at Apple, folks. That thing split 10 for 1. It would be trading at $1,400 a share because it split 10 for 1. That's a big handle. We'll take a look at Facebook right here, and that's the fall of 2018, Mr. P, not 2017. Okay, we'll take a look here at Facebook. Notice when Facebook came out, it got to about $45 a share. It then went all the way down to $17 a share. It made a big ABCD pattern, as you can see, back into September of that year. And then in June of the next year, in 2013, came out in 2012. It made a 61% retracement. Nice little Gartley pattern there at the $26 a share level, and now it's trading at $152. So you can see that I drove. Hold on there, Donald Duck. I drew in the ABCD patterns that you can see on the way up to see how some of them reacted, and the final one that we see is up here about $4 higher if we get to that level. And we left 2 breakaway gaps on Facebook on Friday and again on Monday, so that's telling us that the market is still not really not turning down to any stretch of the imagination as of yet. So we'll see if that's going to be happening, but right now it's still a little bit early in the game. So let's just remind yourself that these markets, they are not invincible. They don't wear armor. We've seen these corrections before. So pay attention. The markets that go straight up like this, you know how they come down. They come down the same way. And that's Isaac Newton's, what goes up must come down. That law has not been repealed as of yet, even though Einstein says that's one of the things that he thinks Einstein got wrong because of some of the high physics stuff that Mr. or Dr. Einstein was certainly capable of talking about. Anyway, let's move on to a few others. We got a question here about the live cattle market, and the thing that we wanted to talk about here is the fact that we had a pretty much vertical move in cattle, and that left a little bit of a doji pattern yesterday that we posted here in the den. And whether the cattle is going to back off much from that level or not, remains to be seen. But it's going to be interesting, no matter what happens. So we're starting out pretty strong here in the Nasdaq again, and we'll see what happens. Yes, thank you, Mr. Z. I misspoke. It's 7. The split was 7-1 in 2014, not 10-1. It was 2014 when it split 7-1, so it would still be trading at way above 1,000, based on that. Okay, now one of the little bit of information here. My good friend Byron Tucker is, of course, in New York. They go to all of the art auctions. That's one of the things that they like to do. The price of really high-priced art, stuff that's in the $300,000-$400,000 category, that has come down more than 35% this year. But the most amazing thing was this past weekend, they had a big photography art gallery that is usually sold out and packed. You just can't even get into it. It's all photography. And Byron was there this weekend, and it said it was like a morgue. He said there was there was nobody there. He said nothing was happening, and it was really a dud. They had all kinds of hors d'oeuvres and champagne and stuff that was just going, to the outside. It just wasn't being used, so it was not very good. Whether that's an indication of how the rich people are handling their money now, I don't know, but at least it's interesting to see, how some of these things are happening. So watch that a little bit anyway. Okay, let's move on to the next question that someone had. That was about Apple. I have no idea, what these earnings are, folks. I swear to you, I have never gotten a tip in all of my years, and this is 55 years of trading. I never got a tip that worked. I've got a lot of them that didn't work, but I never really got one that actually worked. Never. Even during the time when the dot-com bubble, people would call me up and tell me that, the stock was going to go to 200 or, something like that. And it was just not happening. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and the first question that we have following the break was about the IWM that we talked about yesterday. That's the Russell 2000, and we're going to put it up here to take a look at it. As you can see here, we did complete a beautiful 3-drive to a top pattern. It fit every possible scenario that you could get. It's had a big down move yesterday. It was basically, I think, unchanged to down a little bit. And but the problem with that big wide-ranging bar, that usually means you're going to have a correction at least down to the 135 level, and that could very easily happen. You'll notice that there's been a lot of ABCD patterns here over the past 4 or 5 months, and that culminated, of course, with those 2 gap ups into the 3-drive to a top pattern. And what was so nice about that one, folks, is if you'll notice that the high day, which was the day following where the pattern is drawn, it made a higher high by about 2 cents, and that's on a handle of almost 142. So there was certainly no buying there. And then the next day, of course, it had the big down move, and the market has been correcting. It's only been the NASDAQ that has been the big daddy rabbit through this. So keep in mind that that's the one that is really watching to what's going on with some of these things. So keep in mind that some of these things can be pretty powerful, and you want to watch them very, very closely. Getting to the U.S. dollar, which is always very important to watch, and I think that we've hit some really, and just take a look at this, folks, because it's really interesting where we are here. Just give me 1 second to get this up so we can take a look at it here. You'll notice here that we got down to the 98.70 area, and we've been here for 6 days, folks. 7 counting today, and this tells me that maybe this thing is ready to take off to the upside, because the ABCD pattern measures down to 97.50. That would be equivalent to 110 in the euro, because the euro only is 53% of this, but there's a possibility of that. But we've been here for 5 days now. The other part of this is it hasn't rallied either, has it? So if this is a bottom, it's a very, very weak bottom. But right now, if this thing has if it can get above the 99.50 level, then you're going to be. This thing could have legs, and could have a pretty good move. The most important thing about this chart, from a technical perspective, is what's happened since April the 5th. as you'll see here, the S&P has gone higher, and yet the dollar index has gone lower. They have a very high correlation running together. But if you'll look at the time in January, we had the same thing. The stocks continued to go higher, and we had a big drop in the U.S. dollar. So these intermarket relationships do not work all the time. And that's why I've always said, look at each of the indices separately to what you're trading, whether it's the dollar index or the S&P, because that's what's going to be determination of whether you buy or sell. And that's what's on your equity run, folks. It's not the fundamentals of supply and demand. It's what you paid for it and what you're going to get out of it. So that's why pattern recognition, has such a really good place in technical analysis, is because it's based on the number of buyers and sellers. It's not based on any oscillators or anything like that, and that's one of the things that we want to keep an eye out about this. So this crude oil is beginning to look like it's got some support here. But believe me, if we get below 48.50 in the crude oil, folks, that's not going to be a very good spot to look at it. I believe that this thing has a chance to get, if we break below that 48 level, for to keep going lower, Mr. P. I think it could get down to the $40 a barrel level without any trouble at all, because we had that rally and then it didn't do anything, and that's another bad sign. And I think $40 a barrel would really scare the tree up a little bit. I don't know if the conversation today between President Putin and President Trump is going to be related to oil or something like that, because the Russia runs on oil, and if the price of oil keeps dropping, Russia's in big trouble. So they're already in big trouble because their economy is not doing too well. Anyway, we'll watch this, but keep an eye on that in this to see if this is going to be the case for the oil market, because it's very interesting that we get down to that level. There is some support in the NASDAQ at the 5620 to 5619 level, but if we get below that, then you'd be looking at something a whole lot more sinister, and that would be something that you certainly you don't want to be involved in the long side if we get below that 5619, but mainly because of the divergence that we're having here between the IWM and the Dow Jones and the S&P and the New York Stock Exchange Index. All of those are pointing to the downside. Getting back to crude oil, I'm looking over my shoulder here at Bloomberg, and I can see we just traded at 48.64. That breaks below the 78% retracement. Remember, we hit the 61% retracement at 48.25, spot on, and that sets an ABCD pattern up below 48 without any trouble at all. So we could be looking at that, very, very easily. But I think the most important thing today from the standpoint of precious metals is that silver at the 1680 per ounce, because if we break below that, that's going to tell us that we are heading down in these precious metals even lower than that area we were talking about in gold, which was at 1248. So those are the ones that I'm keeping. Folks, if these commodities start breaking, there's trouble in River City. That's just the bottom line. And you don't want to, if they're not selling commodities, something's not right in the economy. And yesterday, Shanghai came out with their number, China came out with their numbers, and the Shanghai market, took a big reversal to the downside because there was virtually no demand, some of the weakest demand they've had over the last 8 or 9 years. And so these are some of the things that you want to be watching as you see some of these foreign markets that have not participated in these markets. That's the key to watching some of these things, because it's got to be a worldwide phenomenon as we move on from this level. Someone's asked me something about the Kentucky Derby, folks. Don't believe me. Out of the last 30 derbies, I've had 3 winners. I had Ferdinand 1986, I had Thunder Gulch in 1997, and then I had Real Quiet a little bit later than that, but I have a long shot about once every 10 years, so I don't want to profess that I know anything, but I do love watching them run. My grandfather used to take me to the little Hoosier Park in Indiana, and then every May we would go down to Kentucky Derby because it cost like $1 to get in. It's just a fairgrounds. It wasn't overblown like it was then, and we would have a wonderful day. And then we would go to Arlington Park in Chicago to see the horses run and stuff. But I had one instance where I bought a horse going back back in the Drexel days. I had it for 7 months, and boy, I'll tell you, that was you talk about a cash cow. That horse ate cash. So I had a lot of fun, but it was an experiment that I don't want to repeat. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have a caller from the Windy City, Chicago. John, are you there?
Yeah. Hi, Larry.
How are you?
I'm great. How are you?
I'm above ground, staying away from open graves. What can I do for you, my friend?
That's great. Hey, I love your show. And I heard you speaking about Arlington Park here in Chicago.
Yep.
And I wanted to let you know my father-in-law, Bill Gavidia, is the winningest jockey at Arlington Park, or one of. He won over 2,000 races in his career. And so you can imagine how many actual races. He actually won the Derby one year.
Well, be sure to tell him that I was there in 1956 when Silky Sullivan won. So I know he'll remember that horse, and that was always a lot of fun for the family years ago. But yeah, that was still fun. Enjoyed it very much.
He takes his grandkids. He takes my kids now. And I'm sure you saw him race if you went to Arlington Park.
Oh, I remember the name, of course. Yes, yeah.
Oh, okay, great. Yeah. Well, in any case, I just wanted to ask you quickly, if you have time. You've mentioned the VIX a few times, and I'm interested in taking a nibble here. Maybe, a VIX call out several weeks, or maybe even the UVXY as just trading as like a stock or something even.
That's correct. Look at it like a $400 insurance policy, because there's a lot of things that could happen to these markets. Like we see, the VIX gaps down 30%. If something would happen to France, or something happened in Korea, those things would go. Well, we think they would go up because of the increased volatility, but you never know. But when they tell you that the VIX is dead, every time they say that, that's just about a wake-up call to get ready to buy the VIX. That's usually what happens. So I like that trade. I really do. I like being long the VIX down in here.
Right. Great. Well, thank you so much. I really appreciate it.
Thank you for the kind words. And look at Thunder Snow in the Derby. They flew that horse from Saudi Arabia to run. Okay, we'll talk to you later.
Oh my gosh.
Thank you, John. You bet. Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.